Michael, why do you think this disappointment was so striking? What is it telling us about the tariff landscape?
I think Bob Pisani said it really well a few minutes ago. Investors just don't know what to do. They don't know where tariffs are going. They don't know how manufacturers are going to respond. They don't understand the supply chain and how quickly manufacturers can shift production elsewhere. And, so you look at Best Buy shares, look at the price. It's been as high as 80 and as low as 50 in the last year. We're kind of settling in the middle, which is telling you investors just don't know where things are going. And poor Best Buy, they don't control very much of the supply chain. They control their private label stuff, which is maybe 10% of sales. Accessories are 10% of sales, and that's all China. And then a big chunk of consumer electronics, phones and TVs and computers are made in China. So they can't control it. They're going to very likely have to raise price. That's going to dampen demand, and it's going to kill margins. So I think the guidance is right. And I think management threw their hands up and said, we don't know what to do.
So what conclusions should we draw about the impact these tariffs are going to have, Michael? If this was one of the best performing stocks throughout the whole transition, as Amazon came to cannibalize their ability to execute has been phenomenal. What should the company be doing and what should investors do with the stock?
This is a good management team, and I had to sell on this thing for years because I was convinced Amazon would put them out of business. Mm-hmm. They've been really astute, and I've been quite surprised at how many consumers remain who just don't want to shop online. Best Buy is the destination for those consumers, and I think Best Buy has been super consumer friendly in kind of creating solutions for smart home, helping people connect everything. They're going to continue on that path. And I think they probably have another 20 or 30 years until that generation of consumers dies out and our kids who do everything on their phones replace them. So they're going to be around for a while. And what they're smart about is they're returning all their cash generated to shareholders. Their share count keeps dropping, which means on flattish revenue, they can keep growing earnings. And that's what we're seeing. So it's not a value-less stock. There's real value there, and it's a really good management team. Okay. It's just hard to put a premium multiple on it.
You have a $71 price target, a hold rating. The shares are just under 63 today. If Best Buy is going to struggle to do sort of as well as you've described, is there anyone you downgrade to a sell given what they've just told us?
I think the market's telling you that, they're going to make about $6 and it's worth probably a 10-ish multiple because of uncertainty. And, if tariffs get more severe, I have to rethink whether they can earn, that kind of number. If tariffs go away, I've got to rethink whether they're going to earn a lot more. So let's see what happens with tariffs.